Good evening, guys. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean to say we actively taking position in asset classes like gold, silver, platinum, oil, petroleum products, oil spreads, natural gas, base metal, agriculture commodities, contract for differences, exchange traded derivatives, over the counter, fixed income products, and foreign exchange. By multinational, I mean we actively covering in 3 locations like United States, European Union, and Asia Pacific region. But like I repeated many a times, many a times, that we are a proprietary hedge fund. By proprietary, I mean to say no third party, I repeat, no third party can invest capital in our funds. Treasury Consulting do not invite any investments from third party. You know that I am covering depression on a very minutely basis. And I already uploaded more than 5 to 6 podcasts covering depression on my YouTube channel. And now I am launching a separate page on the Facebook, probably coming week. In this page, I would be uploading only the podcast which we are shooting. Means voice-based podcast. The last 1.5 months has been very, very, very difficult for the financial as well as the technological industry. Now, if I speak technological industry, then I mean to say that the top profitable companies of the globe, the companies who hold a well-established model, profitable companies, no loss making, positive reserves and surplus, working almost everywhere in the world, they are cutting jobs. Example, Facebook. Facebook cutting around 11,000 jobs. Amazon is cutting around 10,000 jobs. And now there is a news coming that Google is also coming 10,000 jobs. These news are threatening news. We should not be happy on this news, number one. The reason being, if the top and profitable American companies are cutting thousands of jobs, it means something big is happening inside the system, which unfortunately we are not aware of, thanks to media. Strictly speaking, Amazon is saying in the public that the layoffs would continue in 2023 also, which means I'm not sure whether Amazon is trying to give a signal to the market that don't be surprised that if these job cuts would continue in 2023 also. Which means is Amazon is finding something which is not in public. And I told many times that the full credit of that goes to Federal Reserve. Because we are facing supply side problem and now we are resolving with the interest rate. Example, according to public information, Ukraine is amongst the largest producer of wheat in the world. which is 45 million metric tons of wheat, is being produced by Ukraine on an annual basis. But you know what is happening in Ukraine? I continue to track the videos of Ukraine, and as we speak, majority of the Ukraine is in dark. 70% of the capital, Kyiv, of Ukraine is in dark. No power. Forget about the small towns and villages of Ukraine. Forget about that. Which means the 45 million metric ton of wheat which Ukraine used to produce and used to send to the world, it means this wheat is more or less not being produced now. And what these central banks are doing, these central banks are trying to resolve this via hike in the interest rate, which rather than, I repeat, which rather than resolving the problem is exacerbating the problem. It is inducing the problem. It is instigating the problem. And the beauty is these central banks are not understanding, because they are getting the salary, the bonuses, the government vehicle, government accommodation, servants, pension, and everything. So why do they worry about the people who are losing the jobs? I have a statistics with me. Today, when I was doing my research, like I told you that every day I spare 1.5 to 2 hours on Google and see that what are information which is coming on the international platforms. I got to know that 800 plus technological companies, 800 plus, cuts approximately 1,38,000 jobs. 1,38,000 jobs, which, by the way, to me is a huge number. It is only 800 plus companies. And like I said, how many startups are being shut? How many startups are closed? How many startups firing people who are not in the public domain? We have no information, because finding this information is impossible, because no government registry is maintaining that level of information. And we can stress our fact with an evidence that if the big companies like Amazon, Google, Facebook, and Apple, if they are either freezing or they are cutting huge quantity of the people, it means what about the guys, those who have limited business, loss-making companies, and completely dependent on venture capitalist funding? I'm very clear on one thing. Whether anyone agrees with me, whether people do not agree with me, like in 2018, I told that SoftBank would collapse, and please see what is happening today with the SoftBank. 2023 won't be a conducive year for the global financial markets. 2023 won't be a conducive year for global financial markets. The reason being the level of volatility you would be facing. The level of volatility you would be facing beyond imagination. You might not be able to digest the level of volatility you would be facing in 2023, be it any asset class of the globe. And I'm telling you, majority of the people, those who are completely reliant on the media, they barely prepared for this. They barely prepared for this. I would like to request people that please be careful, because if you are expecting 2023 would be an easy year, then you please wait for 2023. Russia is before Ukraine. And today I got a news which really scared me that the nuclear missiles production of Russia is at the top. I don't know how many of you is taking this information lightly, but let it be honest, I am not taking this information lightly because this is not an information which we can ignore. Russia-Ukraine war is in the next is around 10 months old approximately. And in the last 10 months, the Western countries like France, Germany, United States, and variety of countries imposed almost all sanctions on Russia. Almost all sanctions on Russia. But the beauty is Russia passed all sanctions, and the latest and the live example is the Russian ruble. When this war started, the Russian ruble reached almost 200, which means a huge appreciation for US dollar and a huge depreciation for, Russian ruble. GBP tanked almost 1.09, Euro went 0.96. And there were many Einstein, Edisons, Newtons who came in public domain and said that this will further exaggerate. And what happened? You see Russian ruble, you see GBP, you see Euro. GBP is 1.21 as we speak, Euro is 1.04, and Russian ruble, you check yourself. Which means the dollar strength is loosening completely. The gold, which used to be at 1600, and many Einstein Edisons predicted gold would touch 1400, many Edisons. Now the same gold is 1750 plus and trying very hard to reach 1800 because the war is not coming to an end. Rather, both countries are using advanced weapons every day, especially Russia. Cruise missiles, ballistic missiles, drones, and whatnot. The moral of the story is that this would push inflation. This will not calm down inflation. This would push inflation. The reason being, it is a supply side problem, and until this war comes to an end, and don't think that even if this war comes to an end, it will take another 2 to 3 years from the war to bring the normalcy into the world. So I assume tomorrow the war is coming to an end. It will take at least 2 to 3 years to bring normalcy, which is not an easy job. Except for few people who saying that gold is touching 1400 and Euro will collapse and GBP will collapse. Just like Standard Chartered Bank, 1 month ago they said GBP will touch 1.05 by December 2022. And as we speak, it is 1.21. I'm sure that, based on Standard Chartered, because Bloomberg hyped Standard Chartered, people would have sold their GBP, and they would have booked huge losses in the GBP. Guys, please do take a note very carefully that we do not know the shape, size of the war. We do not know this about. And if you are expecting that the Federal Reserve, European Central Bank, Bank of England, the three top, I would say, because People Bank of China and Bank of Japan, the rest two, they made it very clear that they won't be hiking the rate. They made it very clear that. And thanks to People Bank of China and Bank of Japan, they made it very clear that go to hell, whatever happened, we won't be hiking the rate. I'm telling you one thing, if the top three central banks would continue to hike, they not only destroy their economy, which they already, media will reflect this or do not reflect this, that will not change the equation. In this eventuality, the inflation will rise, it will instigate more job losses, more hunger, more poverty, and many more things. So please think very carefully for 2023. Don't take 2023 lightly. I warned you in the last month of 2021 that 2022 won't be an easy year. And now I am warning you 1 month before 2023 that 2023 won't be an easy year. Probably it would be more complex, complicated, and volatile than we had 2022. Rest, I leave on you. You decide yourself because I already decide myself. Anyways, this is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 9899 242 978. In case you want more information, you can visit our fixed income platform www.fixedincome.global. Let me repeat, www.fixedincome.global.